Oh man, I had been waiting for this conversation, right? We both talked last week, the Fed meeting on Wednesday. The Fed gave us what both you and I expected, 75. Then Jerome Powell gets in front of the microphone and all hell breaks loose. I wanted him to get in front of it and be a big old hawk with a big, strong beak and talons. He certainly wasn't that, but the market, dude, the market heard him be a big, fat, fluffy dove. And I've listened to it twice, and I have to ask others because I think I missed something. The stock market, crypto market, bond market, all think the Fed's going to pivot as soon as September. Did you hear that, or did I miss something?
Well, not the bond market. So the bond market is the opposite. The bond market's like, he's in denial. We've got recession, so we're going to flight to safety. That's what the bond market's telling you. The bond market's telling you that the Fed's way off base. They're behind the curve. They're not going to be able to catch up and control this.
Okay.
Risk on investors heard Fed pivot because of when he went off script and said, we've reached neutral. That's when
he said it twice. Oh,
that's when the Fed pivot trade was on. That's when risk on, because in saying that, what he was conveying was, well, we don't have to raise rates anymore because we've reached neutral. Now, I don't know what math they're doing. They're nowhere near neutral. Inflation's at 9%. You subtract the Fed funds rate at 2.5%. Where does that leave you? You still have to raise rates a couple of points to get to neutral. Neutral meaning, so there's a line of equilibrium. So accommodative policy is above neutral. Restrictive policy is below neutral. They've been in way accommodative. Now they're trying to get back to neutral and not get too much of a restrictive territory. So that's, I don't know where he's getting at. And they've had Neil Kashkari now has come out and have walked that back and saying, I don't understand what the stock market heard, but we're not going anywhere. We've got inflation to fight. We have to get it down to 2%. We're going to do whatever it takes. He also said and confirmed, we've never done that in the history of this country without creating a recession.
Yeah.
The economy is slowing. We have to get inflation down. We've never been able to successfully do that without putting the country into a recession. So he walked Powell's comments back big time over the weekend, and you're going to see more Fed officials come out and do the same thing this week. But very interesting. And the market is really, it's been really, really negative for quite a while. We've had a big, drop in the markets, a lot of selling. So we were due a rally, and bear markets can
have
give you really nice, big, giant rallies. So we'll see how long this one lasts.
Yeah. So you think this is just a bear rally, a dead cat bounce, whatever?
Oh, absolutely. The Fed hasn't pivoted. They can't. Earnings were not good. And when you see the stocks that bounced on poor earnings, they missed, they missed their revenues, they missed their profits, but they said, hey, we think we're going to do better next quarter. And stock rallied.
Trust me.
Yeah. So a lot of the earnings recession has not been priced in yet, and the market's going to contract on that. So the question is, how far does it go? How much more downside do you have? And I think you could argue there's at least 10 to 15% minimum left in the markets to give up before the Fed can actually pivot, because we haven't even entered recession, fully yet. We've got the technical definition met, but we're starting to see now mass layoffs. We're starting to see some layoffs. Companies are cutting back, a little bit of restriction. There's still been a lot of demand and liquidity pumped into the markets from consumers over the summer. Again, two things happening in the summer. The housing market drops, but everybody's spending more money. Prices are up, so those sales numbers are going to look higher. So even though revenues are up, earnings aren't. Some companies did well. Apple, had good earnings and they hit all across the board. They're doing a lot of different things, but most companies, revenues were up, but earnings were not, because prices have increased. So we'll see all that start to trickle back into the economy in the fall, because people are depleting their savings, their credit's running up. The other big one too, that we're starting to see now that hasn't hit inflation or headline yet, is energy costs. So as we get into the fall and winter, energy costs are going to be through the roof for people. So that's going to put more pressure on companies, businesses, crypto, Bitcoin miners. That's a big issue for Bitcoin miners. But we saw reports over the weekend in the news about electricity prices doubling in a lot of states, that the electric companies are doubling their rates. Wow. So people that were paying $90, $100 a month are now paying $200. And they're like, we have to make choices. If we pay our electric bill, we can't do these other things. So what's the first area that gets cut? Discretionary spending, eating out, going to the movies, buying those little things that everybody's been buying all summer, taking the trips, taking the vacations, eating out, doing all the different things because we've been locked up for the last 2 years basically and restricted. People went haywire this summer, cabin fever. They're going to contract getting into the fall and the winter because all of these bills are going to come due. So that's what hasn't hit yet. That's what the market knows is coming. So you saw this little rally, a lot of short covering, a lot of hedge funds that had to make money because they're so far down. BlackRock's down $1 trillion.
I saw that.
They have to get in there and start making some money. So that's what you're seeing happening in the markets. But the real earnings, the real recession, the real layoffs, the real business closures, things like that hasn't happened yet. I'm not saying it will or it has to, but I'm just saying we're heading in that direction. And energy is a big one. Food is a big one. And rent and housing costs in general are huge that haven't even been factored into the inflation prints yet.
Yeah, we talked a little bit about this in episode number 1, but we'll do it again here. We get a CPI number next week, I believe. I think it's the 10th. I haven't verified that yet, but it's sometime next week for June, or I'm sorry, for July. And obviously June was 9/1. I'll let you say it here. Do you think we get a 9 handle again?
I think so. I think we're going to be, yeah, I think so.
Yeah. Yeah. And again, kind of tying this together, it's really fun to watch the market and the economy, right? I talked to a stock guy on Sunday and another stock guy today, actually, after our conversation. And the market is set up. The market, I believe, is set up for CPI to be something like 8.5, 8.6, right? That's what they basically are. The stock market wants to claim peak inflation. They want the Fed pivot. The stock market wants the Fed pivot. And the only way they can get it is CPI rolls over significantly, in my opinion.
Well, they tried to talk the Fed into it last week.
They did. Yeah, they did.
I think what really happened was Nancy Pelosi got on the horn and said, "Hey, pal, we've got some buddies we got to bail out here before this comes. Hey, can you give us one more bone before you pull the plug?" So he threw everybody a bone. Friday was a big day. Neil Kashkari came out over the weekend and said, "Wait a minute.
No.
I don't know what the stock market's listening to." But I just looked while we were talking. So next Wednesday, CPI comes out for July. So I don't see how it's not going to be another 9. It's got to be.
Yeah.
The only thing that's come down is gas, nothing else. And then now we're going to see rent and housing come into the mix. So it's got to be the same thing. There's just no way it can come down.
Yeah. From memory in CPI, this again is headline, not core. Headline rent is, I think it's 30% of CPI is rent. And also, as we've talked about for a year now, rent is a lagging indicator, and it's starting to catch up. It's about 6 months behind, and it's right now reporting from memory like 5.8%, but we all know it's 14 or 15 or sometimes 18%. So lots of rent pull through. Gas, sure, it's down. I don't know, call it 10%. I think gas is like pumping gas is like, I don't know, 11 or 12% of CPI. So yeah, I think it pretty easily could have a 9. I think it could have a low 9 on it again. And then what happens there is more Fed presidents come out and say, we've got to do our job, blah, blah, blah. I think there'll be talk of an intermeeting rate hike, which Powell seems to be opposed to. Let me ask you that question. Let's assume it comes in at like 9.3 or 9.4. So peak inflation is not in. Do you think we have talk of an intermeeting raise? Because again, we don't have another Fed meeting till September.
Yeah, if it's in the 9s, I think they might do something between now and the next meeting, maybe 50 basis points or something.
Something, right? Yeah.
Yeah, I think they would have to, because what they've done, that's the other thing he said. He said that there hasn't been enough time for what we've done to really work its way through the system, but it's starting to have an effect. So very interesting Fed meeting, very different tone from Powell. And I mean, I guess it was this, like I said, I guess he was trying to throw a bone to Wall Street before they have to really get serious. But everybody knows it's going to take a long time to get inflation back down to 2%. A lot of that inflation is sticky. Some of it will subside as the economy slows, but a lot of it is very, very sticky. Companies are saying it over and over. It's been reflected in the earnings. And, everything else you're looking at, all the other indicators, core, everything is nothing's coming down. So yeah, I think if you're in the 9s, they might do something before the next meeting. Okay. It's just hard to say. I mean,
it's certainly not
what he's doing just doesn't make any sense.
It's certainly not his natural stance. He is definitely the Fed president that wants to over communicate. He's not Paul Volcker. Paul Volcker loved to rattle Wall Street. That's not Jerome Powell's ilk. But yeah, we get a 9.3, 9.4, start heading to 10. He's going to have to do something.
Yeah,
Kinda,
I'm not sure if it'll be that high, but I'd see it being 9.1 again. I just don't see it. I haven't seen anything come down.
Yeah. So the last question, if you were to give Jerome Powell some truth serum or alcohol, have a one-on-one conversation with him, do you think he would admit over the weekend that he's pissed off that risk on happened Thursday and Friday? Or does he not, is he disconnected, doesn't care that Wall Street went up 4%? What do you think?
I think he knows exactly what he was doing, and I think he was throwing a bone to Wall Street. I think
so. You think it was purpose?
I think so.
Oh,
I think he knew exactly what
shame
was
on you,
happen,
Jerome Powell.
I think he did it for exit liquidity. I think he's helping some people out.
Shame on you, Jerome. Not good. Tisk, tisk, tisk. Bad, bad, bad. Hey, Greg,
he's not dumb. They may be, I don't know what they're looking at with their inflation call, with recession call, things like that. And what's really interesting is Neil Kashkari was the most dovish member.
He was, or is, or was.
And now he's flipped totally the opposite way because he's realized the damage they've done. I think there's more to the story with Powell. He knows exactly what he's doing. He knew exactly what Wall Street would do on his words.
Yeah, and again, it was all off script. You can always off script. It was during the Q&A. Yeah, yeah. He got to neutral, said that twice. Then he talked about the rate. I mean, he said, you're right. I mean, you could look at it as like, well, that's exactly what Wall Street wanted to hear. And if they hear what they want to hear, they're going to do what they do. And they did what they did. So, yeah, I was under the yoke. If you gave him true serum, he would admit he was pissed off. But yeah, maybe he did it on purpose. That's certainly one outcome. Great.
Hey, everybody else, including Larry Summers, everybody else who's been at the Fed, been at the Treasury, has come out and said, I have no clue how he got to neutral. It's indefensible. It makes zero sense.
Yeah, I heard Summers.
So the only answer is he knew exactly what he was doing, and he sent Wall Street a bone for a reason. So the question is, what's that reason? Who's he talking to? Why do you do that?
Not cool, Jerome. Not cool. Greg, where can people find you?
There's nothing wrong with it. A lot of people made a lot of money on that.
Yeah, I guess. Yeah. Where can people find you?
GregDickerson.com. That's where all my info is. YouTube channel, podcast. Go check it out and watch Powell.
Yeah, exactly.
He does.
Watch Powell. Thanks, bud.